So let's talk about gold, right? So obviously gold has run significantly. We haven't really got the response that you would think we would get with a something of this magnitude with Iran and all of the disruptions that have happened there. So curious in your outlook on gold from the short term.
I love gold. I think gold is great. Now, I think you had the reaction. Remember, in today's news cycle, the Iran thing wasn't a total shock. It wasn't a surprise. It had already been priced in to a lot of the markets ahead of time. Okay, you saw a pretty big rally. Now, from a technical standpoint, gold and silver are just in consolidation. Okay, but they're consolidating and getting ready to make the next move higher. Obviously, the more massive the debt goes that we create, the higher the likelihood of silver and gold rallying. And I think that's what you're going to see. I think they're going higher. I mean, I would expect to see probably this year gold up another 10, 12%. I would expect silver to be back over 100 again. I think that we're going to see buyers come into these. But you had the huge rally that everybody got laid away and wasted on because they chased it up to 120. And then, of course, you had a $60 drop, okay, after that. That wiped out a lot of investors. That wiped out a lot of people because, again, they continue to over leverage, chase things up, and then they have to sell out and wonder well, how they lose all their money. Okay, but from a investing standpoint, gold, silver, and platinum are a place to put your money. I think they go higher. I think they continue to go higher. But right now, I think we're just in a consolidation period. But you cannot over leverage yourself trying to buy too much of it. You got to buy what you can afford, so that you can pay your mortgage and pay your car payment and do whatever you need to do.
Yeah. So are you more on the physical gold side or
always physical? Side? I don't think there's enough paper in the world to cover the amount of gold. Okay. Let me rephrase it. There's not enough gold in the world to cover the amount of paper that's written on it.
Yeah.
Okay?
Yeah.
I think that, look, if you're trading, you want to trade paper. I mean, I trade futures, I trade paper, but I own physical. And I think everybody should own physical metals. I think that's a much better way to go. You're not dependent on the paper because, again, it is my belief that there's not enough gold in the world to cover the amount of paper that's written on it.
Mm-hmm. What about the mining stocks?
They're okay. I mean, again, I'm not a big fan of those stocks. Okay. I think there's too many funny business going on there. I don't necessarily care. I don't play many of the miners. When I buy metals, okay, if I'm investing in them, I am buying them and I am storing them. Okay. I am taking physical delivery of stuff. I don't want to be involved in anything. Now, again, trading is one thing, but I'm talking about investing. Something that I'm investing in, I want to touch it, feel it, and hold it.
Mm-hmm. Got it. Yeah, that makes sense. So you mentioned trading the futures markets and such, and obviously there's a lot of skepticism on the futures markets. Obviously, with how many paper contracts there are per ounce of gold and ounce of silver and such. And so many people suspect like there's manipulation in the paper markets and such. And so as a trader of the paper markets, I'm curious in your perspective on that.
No, I don't think so. Listen, markets still take price discovery. So if somebody's trying to manipulate price lower, they got to find a buyer. And they seem to always find a buyer. Okay. There are times when you could see an artificial rally with undue buying or an artificial sell with undue selling. But at the end, it still takes a buyer and a seller to create the right price. Okay. So it's hard to manipulate an asset, okay, that has a two-sided market that isn't controlled by anybody. And that's the point. So, manipulation is tricky. I don't think that they're manipulated at all. I think there's some things that go on, and you might have some bigger traders that have more money that might try to step on them for a while. That's fine. But again, the buyers can walk away, okay, and let the price fall even further. I mean, when I was on the trading floor, if we didn't want to be involved, we walked out of the pit and didn't have to do anything, okay? So again, it has to take two sides. So if there was true manipulation, there would be no buyers or no sellers when the markets are trying to be moved. There is a lot of manipulation, however, in the fiat currency system, which is a totally criminal system to begin with. So.
Yeah, for sure. What do you think about the price smashes, though? I mean, so when we see gold, close at a certain price per ounce measured in dollars, and then all of a sudden during hours of illiquidity, it gets smashed down, and so I'm kind of curious of your perspective on that.
Well, I mean, that's part of trading, but it's still it's a zero-sum game. Somebody's making money on that trade, somebody's losing money on that trade, right? So again, yes, overnight when market's a little bit thinner, but they always will revert back to where they should be, and where, again, it still comes to buyers and sellers meeting. So I can't get to that point where I'm going to say it's out and out manipulated, because there are traders involved. And as you saw, gold last night was down over 100 at one point. Okay, now it's down 57. Okay, yeah. So again, the buyers came in, they stepped in. Hell, the Nasdaq is just now turning up to only down 80 points right now after being down over 600. So again, it takes two sides to make the market. They can't make the market go in a direction unless they're willing to commit funds to buy it or commit funds to sell it. Okay. Yeah. So again, where do I find? I can't find manipulation in that.
Okay, got it. What's your thought on the CME? Like in like the CME having these hours where they either close trading or I think at one point their data centers or something like that were overheated or whatever the case, whatever it was. So the CME, what's your perspective on that?
Well, I mean, the CME is an electronic exchange, just like the Nasdaq is, and there's obviously some funny business that can go on. We go back to the flash crash when many brokers shut their systems down and didn't allow you to trade them back in 2010. Look, the controlling bodies can do a lot of things because if it's electronic, you just turn the switch off. Okay. But what they have done is they've raised margins to make it almost impossible for the average guy to trade with the amount of margin they're requiring now. There's a lot of things that go on, but you still need a clearing member and a clearing house. Okay. But I think what you're going to find out, and I think it's probably sooner than you think, you're going to see 24/7 trading. Okay. We're already 24/5 on a lot of products. And of course, I don't know if you're aware of it, but the CME is coming out with single stock futures again. Okay. Which they tried once before, it didn't work, but they're coming out with it again, that are going to be 24/5. I say we're less than a year away from 24/7 in all markets. Okay. And they can do what they want, and they're going to listen. When you get crazy markets, they're going to try to restrict things and make margins so high that you can't participate. Because, of course, let's face it, all of the rules in the system are meant to help the brokerage houses so they can make more money on their overnight rate. That's why margins go crazy and go higher, to prevent you from trading, from losing your money, so they can collect their interest rate overnight.
Okay. So you mentioned single stock futures. You said it didn't work in the past. How come that didn't work in the past? Do you know?
Well, in the past, there was enough to trade, and you didn't have, zero DTE options in equities. Now you've got a lot of zero DTEs. You've got every other day expirations now. So all they're really doing is they're forcing this into almost the binary option type of market where there's going to be multiple expirations. And now with more people trading, okay, and futures, the single stock futures have a chance to work, because not only will they have the future, but they'll have options on the future. And it's another way to trade. Plus the fact that, with FINRA's day trading rule versus the CFTC that doesn't have one, that makes it very prohibitive for a lot of traders to trade equities because of the minimum of 25,000 and maintaining a balance of 25,000 all the time. So I think that now, with more activity in the market, you have a real chance for these single stock futures to work.
Okay, got it. So earlier you mentioned that gold, silver, platinum running higher because of debt and this fiat system. And so, are there any other drivers that you see for those metals?
Well, I mean, inflation, fear, solid hard assets. Okay, I mean, those are again obviously good reasons. And of course, if we go back in history, gold and silver have rallied throughout history, as has the equity markets have rallied throughout history. I don't think that that's going to suddenly change anytime soon. And I think that continues. And I think that, of course, you just need to look for good, solid opportunities to be able to invest. But again, I'm going to warn back again, just invest what you can afford. Because the worst thing, you don't buy gold because you want to sell it tomorrow. Okay, if you're buying physical gold, you buy gold because you want to hold it throughout the duration for whatever period of time that you're going to hold for. But you're not trying to day trade physical metals. Okay, You want to day trade, you day trade the paper markets because, again, you're not at risk. But if you buy paper markets for an investment for long term, if I'm right, there's not enough to cover. If you ever want to exercise your rights, then you can't get it.
Gotcha. Do you have any thoughts on the silver to gold ratio? Is that something you follow?
It's coming very nicely. It was over 100. Now, as of today, it's 60. I think it comes even farther. I mean, the original ratio was 15-1, but I could see the ratio coming down into the low 50s without much of a problem. 40s maybe.
Okay.
I mean, I think silver's going to, silver's all of a sudden become a hot commodity from an industrial standpoint now too, as well. Hotter than it ever was before. So all of a sudden, the value of silver, not only for other reasons, but now industrially has become much more vogue as well. So I think silver has a chance to close that gap even further.
Okay, got it. And then platinum. So currently platinum futures are trading about $2,159 US dollars. And we traded as high as close to $3,000 this year. And so curious in your future outlook on platinum.
Well, I love platinum. I mean, I think it's a poor man. It's now it's about it's about 40% of what gold is. It used to be double gold. I think it's a value. I think it's a discounted item. Obviously, it's not as used as much, but it still has value. And I'm sure they'll find another reason. Certainly, I buy like 50% gold, 30% silver, 20% platinum.
Okay.
That's how I kind of break it down when I buy it.
Yeah. So obviously platinum has a lot more industrial uses, but I mean most of it's mined out of South Africa and Russia. So that kind of gives a jurisdictional risk to that metal.